topic that I've been assigned is digitization. A lot of inspiration from speakers that came before me. I don't have any prepared comments, so I'll just share some open perspectives with you. Now, digitization, as many of you know, perhaps better than me, is a national priority agenda for many countries around the world. And this agenda is typically the purview of policymakers, subject matter experts, technologists. I am none of that. So what I will share with you is just a foreign investor's perspective as to why digitization and transformation of an economy using digitization matters to a foreign investor. At SoftBank, we have deployed some $170 billion around the world, literally around the world. From Australia to Brazil and everything in between, we've invested in about 450 companies. And we get a good perspective from a country and geography perspective as to what works and what doesn't work. I would say something that you may find a little bit hard to believe, but our perspective, and stand corrected if that's wrong, our perspective is that the conventional wisdom of moving workers from farms to factories to increase productivity and to create a surplus of exportable goods is an old theory. In today's world, where you have deglobalization, and it's real, we are seeing it in our businesses. We are very large investors in the semiconductor business around the world. We're seeing it today. There is deglobalization happening. There is nearshoring. There is onshoring. So in a world which is deglobalizing, in a world that is actually embracing protectionism, in a world where factory automation is real, in that world, a quest for industrialization alone as a strategy for economic prosperity and a means to provide jobs for future generations is an exercise in futility. You need to combine this with having a very steadfast vision on digitization of your economy and embracing technology as an enabler. I'll give you two examples, two countries that we looked at and invested in. One was India, and the other is Indonesia. Both very large Asian countries. Obviously, India is much bigger than Indonesia from a population perspective, but the GDP per capita of Indonesia is double that of India. Having said that, our experience was that India was a better investment market in the end than Indonesia was. Many reasons for that, but two principal reasons in our observation were: first, India had a national digital infrastructure, almost a public utility, that was available to its private sector to develop businesses on top of. It had a local private sector that was a provider of capital domestically before they actually even come and approach the foreign investors. If I now double-click on the national infrastructure that they have built in the digitization space, it's quite incredible. They started off about 7, 8 years ago, I would say. They started off by actually looking at biometric verification as a means to achieve a completely different objective. But it penetrated so fast that it became a means for identification around the country that could then be used and embedded into what they call the India stack. The India stack is nothing more than multiple layers of digital platforms. These digital platforms include a universal payment interface, which allows you to actually move money peer-to-peer, peer-to-merchant across the country. 8 billion transactions, 8 billion. 8 billion transactions worth just under $300 billion were undertaken on UPI just in the month of January this year. Such is the power of this infrastructure that they have built. Then they have another layer which enables you to store all your identity documents, marriage certificate, birth certificate, college degrees, etc., all of that into what they call the digital locker. When you actually put this as a stack and start to mobilize this stack across your technology infrastructure, the customer acquisition cost for any application built on top of it is actually very low. When my investment committee, which is global in nature, we don't have regional allocations, we have global allocations. When my investment committee looks at a business coming from India, which has a very low customer acquisition cost, the unit economics naturally start to make sense. The GDP per capita advantage of Indonesia, which lacks that infrastructure, cannot compete with the unit economics that India can offer because of this public utility that they have created. So the thought that I wanted to share with you as part of this rethink is, in Pakistan, we do have NADRA, which has done a phenomenal job in providing biometric verification, biometric identification to most of the nationals of the country. Great job. But is that NADRA biometric verification system being leveraged to do something else with it to actually transform the country and take it into the next decade of digitization? I don't think that's happening. I think there is ministerial ownership of NADRA under one ministry, and the digitization policy is perhaps being pursued by someone else, and I don't think they talk to each other. That's got to change. If I was to leave you with one message, it would be that don't create infrastructure which is walled gardens where you're trying to collect toll tax just to go on that infrastructure. Make that infrastructure ubiquitous. Allow people, private businesses, investors to invest in businesses that can actually build value-added products and services on top of that infrastructure. That is something that would attract foreign direct investment. Another thing that we actually observed in India was the affinity of its domestic private capital to back this quest towards technology, growth sector. We have not seen it to the same extent in Pakistan. It's changing. A lot of people are embracing this as an investment strategy. But in India, just to give you one small example, because that happened, it gave us a lot of confidence that if Indians are actually putting their life's earnings into this and the business case stacks up, then it must make sense for us as a foreign investor as well. Give you one example. During COVID, when the world was hunkered down, we were all counting death tolls in various countries and looking at vaccine distribution. Sputnik is better than Pfizer and so on and so forth. Mukesh Ambani raised under $20 billion. 18, I think, was the right number. Sovereign wealth funds, who's who of the world. Private equity investors, who's who of the world. When the capital markets were in free fall, he was raising this amount of money. Why? Because he was raising it for Jio. Jio has mass penetration in India. CAC is very low now. Broadband doesn't cost much. So what's next to do? Push the content. You can sell products and services through the Jio platform. Today, I sit in the Middle East. I've been in the region for about 11, 12 years now. Very connected in Saudi Arabia and the UAE from a policymaker's perspective. And I hear their views. They cannot have enough of India today. They just cannot. They see such huge potential in that country. So enough of India. In our rethink, we should embrace technology as a growth driver for our economy. If you look at the private sector in Pakistan, I interact with a lot of startups from here that come to raise capital in the UAE. It's quite encouraging to see that the entrepreneurial spirit exists in Pakistan. This needs to be backed by domestic capital. This needs to be backed by consistent long-term vision and policy framework. So I leave you with that thought and switch gears a little bit. I heard prior speakers talk about artificial intelligence. We're big investors in artificial intelligence, and whilst we've been pursuing this mission for the last 5, 6 years, you know, what's happened with GPT and OpenAI has really woken the world up. And I remember the days when GPT 3.5 actually was sent to take the medical exam and the law exam, and it actually failed both. A few months later, it not only passed both with GPT-4, but it was top 10% of class. So what's the point I'm making? The point I'm making is that generative processing technology is here. It's going to be a paradigm shift. Just like in 1995, the world saw the internet. If you look at the top 5 companies in the world today, one of them is Saudi Aramco, I think it's number 2 or something. The other 4 are all technology companies. They were not top 5 in 1995, they're all top 5 today. So generative processing technology will build the companies of the future. If you actually look at the whole stack, the entire OpenAI stack is the result of the work of some 400 engineers, 400. A few $100 million spent, so not big money. And this is what they have achieved. What we're seeing now is an arms race for capital. 10 billion has been invested into OpenAI by Microsoft. This is just a start. Google has its own mission. When this arms race starts, companies that plug into OpenAI will be the winners. Companies that try to sidestep this technology and continue in their old ways will actually eventually lose out, and this will not be a very long transition. This also is such a pervasive technology that it will have societal consequences for society. Factory automation, when you've actually got real-time feed into bots from GPT technology, will actually enhance that factory automation to levels that we've never seen before. So it will probably eliminate blue-collar jobs, and therefore we should not have an economic policy that relies on blue-collar wage cost differential as being our only competitive advantage. If we cannot improve productivity, if we cannot embrace technology, if we cannot benefit from OpenAI's ChatGPT and the developments in generative processing technology going forward, we will actually need to do another rethink in 5 years, and the world will be a very different place. So my humble submission to you, thank you, I'm almost done. My humble submission to you is to reflect on the policy frameworks that you have in place, and also reflect on the economic realities that you have. I'm not against industrial policy, that's not the mission I'm on. All I'm saying is, in a country that's constrained by foreign exchange reserves, the journey from import capex for machinery and export dollars is a long journey. Do we have time and resources for that journey? Or do we want to actually divert some of the resources, not all of them, some of those resources towards developing the domestic technology agenda such that we don't have to first spend that much time leveraging that investment, and second and most importantly, we actually have some diversification of our economy and get assimilated into the rest of the world in the direction it's going.